Hello.
Hi.
Last week we talked about how to analyze your spending, and it was a very casual approach to identifying your spending habits and spotting trouble areas. But what we didn't do is talk about what we would do if our poor spending habits ever landed us in debt.
If we were in debt, our approach would be very different. And in this video, we're not going to spend time talking about why getting out of debt should be your #1 priority. To make this a little more relatable, we are going to assume some hypothetical numbers.
But these numbers are based on actual household debt statistics according to the Federal Reserve.
Let's say we woke up with 2 credit cards totaling $7,500.
And 3 student loans totaling $24,000.
An $11,000 car loan.
And a mortgage of $100,000. But if you subtract the mortgage, we have around $42,000 in debt that we'd like to get rid of.
At first, we were going to use our own budget to work through the debt, but because we don't have car loans or any debt, it was hard to manufacture savings.
So we'll just use hypothetical savings as well, but we do have a lot of ground to cover, so let's move fast. First things first, we would cut up all of our credit cards because clearly we can't handle having them. As silly as it may sound, a plastectomy might be in order.
Next, we would call each of our creditors and ask if they have a hardship program.
Unfortunately, since none of our balances were past due, we're not going to get very far, but we might get our interest rates on our credit cards temporarily lowered.
Then we would make our plans public. Now, you don't need to share numbers like we do, but a quick post to Facebook would make it so that you have some public accountability and also a little encouragement along the way.
Next is where the rubber meets the road. It's time to cut spending. And if we woke up in debt, we would treat it as if paying off our debt was going to save our life. No luxury, no leisure, no travel. First thing to go would be the restaurant budget, and this would be cut to literally zero. Not on special occasions, not ever. And we'd also probably adopt something very close to a literal rice and beans diet from the grocery store, although realistically I don't know how well we would adhere to that. Estimated savings, around $400 a month.
Next is the cell phone bill. The contracts would be bought out and then we would sell our iPhones to cover the cost of the early termination. We could go and get burner phones from Walmart that we would use just in case of emergency.
Both charitable giving and investments / 401k contributions would be put on pause. Whether or not it's biblical, we would probably stop tithing during these extreme budget cuts, but it would be the first thing to go back in before any luxuries, including a cell phone or restaurants.
Finally, it goes without saying, no discretionary spending. No new clothes, no electronics, no cable. The absolute bare minimum in makeup and uniforms just to keep gainful employment.
Estimated savings, we'll put down $200, but this is on the really low side. This leaves the car payment, but luckily this debt is easy to eliminate because we have an asset to pay off the loan. Unfortunately, we probably don't have any cash saved for a replacement vehicle, so that's the first thing we're gonna save for. We'd start by making the minimum payment on all of our debts, and then save that $1,120 every month for 3 months until we had around $3,000 to $4,000, and then we would buy a beater car in that price range. And before we get into an argument about whether that's not possible or whatever, your commute, blah, 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 this is just what we would do.
By selling the old car, we immediately eliminate $11,000 in debt, and we free up $300 a month for the car payment. And we also have a savings of $75 on insurance.
You can see why this is our first priority. Suddenly now we have $1,500 a month to pay down our debt, and at this point we have 2 options, the debt snowball strategy or the debt avalanche. The debt snowball strategy says to pay off the lowest balance debt first and move your way up to the higher balances, where the debt avalanche strategy says to pay the highest APR first and work down to the lowest. The mathematically correct option is to use the debt avalanche, where you pay the highest interest rate debts first. But if math was a good motivator for us in the beginning, we wouldn't have been in debt in the first place. So we're going to have to cautiously put our foot into the Dave Ramsey camp, because seeing those first few debts paid off early is a better psychological motivator than technically saving a few $100s on interest.
Now, if we kept this up, it would take us 23 months to pay off all of our credit card debt and student loans. But since we don't have any extra money to spend on entertainment or going out, we might as well get busy and pick up some extra work.
You could speed things along a little bit by asking for overtime, waiting tables, delivering pizzas, mowing lawns. These would all be considerations if we woke up in debt. You can also check the Craigslist gigs section for one-day jobs that pay cash and put money in the bank immediately.
Let's assume that we can generate an extra $1,000 a month from our side gigs. That brings our time down to only 14 months.
But we can do better. Speaking of Craigslist, everything in the house is now officially on sale at steep discounts. All those gadgets, electronics, and expensive hobbies that you put on the credit card last year are now going to be sold to pay it off. When we moved back to Florida a few years ago, our Craigslist selling spree netted us over $4,200, and we don't even have a spending problem. But if you've got a motorcycle or an ATV or a boat in the garage, you could easily double that figure.
With the extreme budget cuts, trading down the car, listing everything on Craigslist, and getting side work, we have knocked down our time to only 12 months to pay off $42,000 in debt.
Now, it's easy for us to sit here and say that paying off $42,000 in debt in 12 months would be easy, but you gotta remember, you're not traveling, you're not eating out, you're not shopping, you're driving a crappy car around, you're basically eating rice and beans for an entire year. And that's really, really hard to do. But if we're being brutally honest with ourselves, that is exactly what we would do if we woke up in debt. Once we paid off the student loans, we would definitely loosen the reins a bit. We would quit our side jobs and add a little bit more luxury to our lives. But we need to remember that we can't go back in debt again, so we need to save between $500 and $1,000 a month at least to put towards an emergency fund and a replacement car fund, because we're still driving that beater car around. After the car and the emergency fund, we can start investing in our retirement and actually have control of our future once again.
We know that was a very hypothetical exercise, but we hope that it helps someone out there.
And if you have any questions, leave them in the comments below, or if you have any holes to poke in our theories, we'd love to hear them. Bye, guys.